What's going on, guys? Today I have another video for you about Alibaba stock, and specifically we're going to be diving into some news that came out that Alibaba is doubling down on their cloud space. They are aggressively adding capital and funding more cloud advertising and basically expanding that side of their business. So we're going to go ahead and jump into an article that kind of goes over some of what they're doing, some of where they're positioned at in the market, and all of that kind of news around their cloud space. So if you like the video, make sure you drop a like down below, and if you want to see more videos like this one, make sure you hit that sub button. Before we jump into that article, let's take a look at Alibaba's chart. So they were hurt just like the rest of the market on Friday in a very significant way. And over the last week, they've been getting destroyed as well. Again, along with the rest of the market, they're down over 7%. And if we look at the last year, they're actually down over 45%. So this has been a stock that's been absolutely destroyed by the market and by all the news around it, but they still haven't actually gotten back down to their all-time lows. So their all-time lows back in March were around 73, it says here 73.28. So overall, they still haven't gotten back down to that point, but they're trending like in the next week. If we see another big downward move or this trend kind of continue, we could easily see them fall below those 52-week lows. Before we jump into the cloud news, I wanted to give a quick update on where the audits are at. So if you haven't heard, US companies, US audit firms are now able to go into China and audit Chinese companies. And this is kicked off around a month ago. A deal was signed, and basically it kicked off a couple weeks ago where a lot of these auditors started going into China, and they're expecting this process to take around 8 to 10 weeks. And basically they'll be able to go in, look at the companies and determine if they are good and able to stay on the the New York Stock Exchange, or if there are, concerns with it, with the information that they're receiving and with the companies, and if they should be delisted. So overall, if they do end up being delisted, that would be an absolutely terrible thing for the New York Stock Exchange, because we'd see over $1.15 trillion come off of the New York Stock Exchange, as over 200 Chinese companies would be delisted. And this delisting wouldn't actually occur until 2024. Let's go ahead and jump into the Alibaba Cloud news. So what they announced is a $1 billion investment into their global partner ecosystem upgrade. And that comes as a $1 billion initiative that will likely support partners' technology innovation and market expansion with Alibaba Cloud in the coming 3 fiscal years. So overall, this $1 billion is going to be spread over 3 fiscal years. And the money will come in financial, non-financial incentives, including funding, rebates, and go-to-market initiatives. So basically what they're talking about there is they are looking at expanding their horizon. So right now they have a large focus in China in having cloud space over just China. And they're expanding that now to become more of a world leader in cloud. And they want to do that by getting more people aware that they can use cloud services not by Alibaba, not only in China, but basically anywhere where you're at in the world. And something people often always forget is Alibaba Cloud is now the 3rd largest public cloud provider in the world. They enjoy a 9.5 market share in 2021, trailing only Microsoft and Amazon. Amazon is sitting up here huge with 39% market share and Microsoft at 21%. So they are still relatively far behind both of these players, Microsoft and Amazon. But overall, what you have to remember is a lot of people talk about China being 5 years behind in terms of its technology compared to the US. And if you think about where Microsoft and Amazon's cloud businesses were 5 years ago and where they're at today, that is the potential that Alibaba has in China. They have a lot of potential to still expand their cloud business throughout China, and China overall is a much larger marketplace. So they could easily grow their market share quite significantly over the next 5 years. And on top of being the largest cloud provider in China, they also are aggressively expanding overseas. So they launched 4 data centers in 3 countries, Germany, Thailand, and Saudi Arabia over the last quarter. And this is absolutely huge, right? As they grow their infrastructure in other countries, they can become a bigger and bigger player across the world. And it seems like based on these data centers that they've put in Saudi Arabia and Thailand, that they can get a lot of market share over Asia and especially Southeast Asia. That would be an absolutely massive market over the coming years, especially when you think about India and where India is headed, and becoming a big player in that market, as well as some of these other countries that have a lot of, growth in terms of population in front of them. So there's always two sides to the story, and what we have here is that growing national security tensions between China and the West drove some customers away from its cloud platform. The most notable being TikTok. So TikTok reportedly migrated from Alibaba Cloud to Oracle Corp servers to win over US regulators. And obviously this is a bad thing. Anytime you're losing customers, it cannot be a good thing. But if you want to think long term, there also is some potential in looking at this news in a positive light, because Chinese regulators have to also be seeing this news. And you have TikTok, which is a Chinese company, going away from a Chinese company like Alibaba and switching their business to a US-based company, which should overall be concerning for US or Chinese lawmakers, because at the end of the day, they're getting a lot of pushback from their population and from the world economy, because Chinese growth has started to slow in a massive way and their GDP has fallen off, and a lot of what's to blame for that is the Chinese regulation of a lot of their tech business and other businesses within China. So they've had a lot of fines against Chinese tech businesses and regulations put against them. And we've seen lately that China has started to pull back in certain ways. They've started to pull back on their interest rates by lowering their interest rates. And I think the next big move for China to try and stimulate growth is basically to reduce and allow for more freedom from these Chinese tech companies, which will only benefit companies like Alibaba. The biggest risk to Alibaba is still the delisting risk that is there and present. But what we have seen over the last month or so of time is a lot of positive things coming about for the stock, right? US regulators and auditors are now able to go into Hong Kong and actually look at these companies, which is absolutely massive. That's going to be a good thing, again, as long as the findings and nothing goes wrong there. The other thing that we've seen with Alibaba is overall, right, China has basically started lowering their interest rates. So they've started to pull back on their interest rates to try and stimulate growth within China. And they are looking like they are basically going to get into what the US experienced in 2008 with a very large housing market crash. And China overall is going to be looking at ways to basically keep growing their company and ways to stimulate, their overall economy. And that will, in the long run, benefit Alibaba. It'll be huge for basically their growth, being able to borrow money at a very cheap rate in China, and overall helping them expand businesses like their cloud business. And what we can see here is their valuation has dropped in a massive way just in the last year. So they have been cut in a third basically over the last year from where their market cap was, around 600 billion to 200 billion. And their PE ratio, their forward PE ratio, has been cut by over half. So we are seeing a very good valuation in terms of where the stock is at right now. In my basically opinion, going forward, there's a lot of more upside potential with a stock like Alibaba than there is downside potential. So again, I am long Alibaba. I do like the stock. I like the stock for the long term. I think there's a lot of positive things that overall the market has not really, digested fully, because there's just been a lot of other negative things going on with the US economy in general. So I think once those things start getting figured out and people become more comfortable with where we're headed in the future, I think Alibaba is a stock that could move up in a very massive way. So again, obviously do your own research, make your own opinion on if you want to own Alibaba shares or not. Again, there is a lot of risk that comes along with it, but some of those risks are starting to fall to the wayside. So that's just my opinion on it. I hope you enjoyed the video. If you did, make sure to drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.